What is going on, and happy Friday? Welcome on into today, September 29th, the last trading day of the month of September, and which is historically a weak month. We know that, and it is kind of living up to what we kind of thought it was going to be. And today is kind of no different. We had a pretty decent gap up. We had PCE numbers come out this morning, which I believe pretty much were in line with expectations. And then now we gapped up and rejected right off this 431.70 area, give or take, on SPY, which the reason why that's notable to me is because that is the spot that, if you were to kind of go back in time, has been a pretty key area. Dip buy area, rejection back in last August, over a year ago. And so now we couldn't get back above. So this would have been a good look. If we could have gotten back above, it would have been a good look. It would have been bullish to me. But we cannot get back above. Maybe put in some higher lows. Maybe it gets back up there next week for all we know. But for now, we reject off that level. So not the most bullish of days, we can say that. But if you jump over to the weekly chart, depends on how we close here. If we close kind of strong, this could change the look of this a little bit, but we've got a pretty large and substantial lower wick on very high volume. That's kind of telling us that maybe that there are some buyers coming in and we're seeing an exhaustion of sellers, as we couldn't break even lower. On high volume, we started to kind of bounce. So maybe there's something there. We'll see. But that's a look at SPY to kind of get us set for the day or for the weekend. There are some other notable things that I think are worth mentioning inside of this whole day. The 10-year was decently down. Now it's back to flat/green. Big upper wick up to almost 4.7. 4.69 hit roughly yesterday afternoon, or yesterday at some point. Came down to 4.51 today, roughly. And now it currently sits just under 4.6 at 4.588. The dollar was also interesting. Very well, it was down. It was weak. It has come back, gained itself back, and now is currently up on the day, leading me into what looks pretty nasty over with silver and gold. So I want to pull these up because these charts don't look great. So I'll start with silver. I had a position in silver. I exited. Maybe I get burnt. I don't know if I get burnt. I locked the position in at 8.9% in the profit. And then I had sold covered calls. I've been selling covered calls for months on my silver, my AGQ, which was my silver exposure. It's a leveraged silver exposure, but it's silver exposure essentially. It was up a lot more. I'll tell you that. It was up a lot more at times, but I'm not going to be greedy. And hey, this doesn't look good, so I'm going to sell it. If I wanted to be short, I'd be short right now on silver. So, which actually I do have a little bit. You've got lower highs starting here, 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 here. Massive upper wick today. Huge fake out move. I mean, the 5-minute chart is insane on silver today. I mean, look at this move. Absolutely. Looked like, oh my God, we're so strong, and then just gave it all back, and it's now red, decently red. So it's bouncing off this blue line, which this blue line, again, is right at the support level, pretty much the lows of this past year, or this past couple of months, I should say. But does not look good. I mean, I wouldn't be interested in being long here personally. It is kind of at support, but I mean, that's why I got out of it. Totally could get back in. I've been meaning to get out of that and just get into SLV, which is no leverage, and then sell covered calls on that. But my plan is see what silver does somewhere. If it gets down to here, then I'll start accumulating SLV. But if it doesn't get there, maybe I just don't touch it, leave it alone. Who knows? Either way, this chart does not look good. I would suspect that next week we see continuation to the downside. I don't know. Again, who knows? But I have been in these. How many times have you been in these trades where like you're looking at it because you're in, you're like, oh, you got good support. And it does, right? It does have support here. But you don't look at the fact that you've got lower highs into support, pressure to the downside, massive upper wick. It's now like the 7th time, or I'm just exaggerating, but you came down here once, twice, this little wick right here. You want to count that 3 times. This is like the, 3rd time's a charm, 4th time's a charm, whatever it is. You're putting pressure on this level. Eventually that level is going to break, and you have a higher probability of that happening because of these lower highs. Doesn't mean it has to, but it's a higher probability. So that's what I decided to do, and we'll see how it plays out. I have a small short on it. It's not a big short by any means, and it's out, many weeks, and not many weeks, but like about a month out, and that's it. So we shall see. Hope you guys are having a good Friday. Scary chart. What is going on? Nasty looking chart. Yeah. Wheat commodity. Huge down there. S&P had some good trading. What's wheat looking like? I have no idea what kind of tickers even would look up on that. Oh, God. That looks pretty bad. But like, again, same kind of idea though, right? Like for momentum on the downside, like this would have been a decent trade for me. Not that I trade wheat, but just an example. Trading views being weird. But maybe I got too much shit going on. Maybe I do. Delete some of these tabs. But no, yeah. So you had this little right here, higher lows, try to build, and then it broke that. But why that has such a nice look is because you're just putting pressure into that. You can always, like, the flip side can happen. You can get these big reversals back up, but they tend to be really nice either direction, but they tend to be really nice shorts and flip side longs, right? It's the exact same thing, just other way around when you've got the trend in your direction prior to the break. But that is a beauty though. If you short, like if you're playing the short, that's beautiful. Oil, pull this up. Oil's down again today, about 1%, back down to like just under 91. It broke 93, hit 90, almost 95, just about 95 yesterday. Crazy. But I'm curious to see what happens here. We had this big push. This is a spot. This is a level on oil that, like, double top high back in October, November of last year. Let's go to the daily chart. It's probably easier to see it. And then I don't know. You generally don't just see moves blast right through like that. So I was kind of surprised that, like, we haven't really had, you had a little bit here, which is nice. But I'd be pretty surprised if oil was to just kind of like blast through and just not look back, go for 100 plus and not look back. So I wouldn't be surprised if you get some sort of bigger pullback, like that's kind of like looks like this. And then does that become bigger and we break down, or is it just, the next leg, setting up the next leg up? We'll see. We're in an uptrend, so for now it's bullish, right? So you don't want to fight that until, otherwise noted. Yeah, it's been lagging. I don't know why. I think it's my computer when I start running too much stuff, but I really don't. I don't know. I added so much RAM to this thing. Like, I bought additional cards and like added it to the computer, so it's got like, I don't know what it was when I first got it. It might have been 16 gigs. I think it's up to like 40 something now. 48 maybe is what I have it up to. I have no idea. Like, I'm not a computer guy at all, so I have no clue like what I'm doing, to be honest. But I do know, like, if you wanted to run like multiple platforms, multiple apps at the same time, like, it's probably not a bad idea for like just my user, well, just to be able to move through things quickly. So I don't know. I haven't really noticed a massive difference. I feel like it's, if anything, like slower when I do certain things, but not bad. I don't know. So, but yeah, I just did the September trade recap. It'll be out tomorrow morning. So we went over the entire month. So kind of a long video. It's like 25 minutes long, but I think it's good to look at, and some decent insights out of that. And then I had today, it was a break-even day. I really finished the week off pretty shitty. Like, it's not even like, it's kind of sucks. We had like some small greens for a while. We had some reds, and then like the month finishes. It's like we couldn't even get some decent green days. We just got break-even days. I'm like, kind of just, that sucks. Like, you can't even just throw in, one or two really nice days in there. No, just all break evens. Like, to feel like to finish it off. Break evens and losses. Good graphics card helps. Yeah, I think I'm gonna, I don't know what I'm gonna do, but I'm thinking about at some point upgrading. Like, I will not be cheap when it comes to that stuff. Like I will go all out. So got to do some more research. Got to think about what I want to be. Do I want to stay Mac? Do I want to go, what do I want to do? What makes the most sense? And then just go get an absolute beast that I can run anything and everything I want at the same time and not have any issues. So that's what I want to be able to do. Xbox Series X, 70% off. I saw that Amazon's having like a random like mid-October sale for Prime members. I didn't know that was like a thing. They got like some other Prime deal day or some shit they have coming up. I saw that last night on advertised. I think on Thursday Night Football they had it up. I don't know. Also, that's another thing. I picked the Lions. I had the Lions last night. After I didn't put a bet down until I saw the first 2 drives for both teams, but I hit Lions. I got Lions -7. I mean, that hit nice. I haven't been betting like very seriously, but like I am on the most insane run that I have ever had. Not that it's like insane. Like I'm not doubling down every bet. I'm doing like the same thing I would with like trading. Like at this point, I bet a set amount on each thing that on each bet that I'm going to place. And I don't bet like very much, but it's only when I have like that higher conviction kind of behind it. For whatever reason, it's been just nailing them. Took out money and I'm about to get to the point where I got to withdraw some more again because it just keeps going up. But that said, I mean, I don't, when you have a bad relationship with it though, like it's really easy to have a terrible relationship where you start doubling down and stuff. And then next thing you know, you're betting on some obscure teams, like some obscure shit, or you're betting on some random Mac college games on a Thursday night. Like that's when it just becomes, okay, you're a mess. You are not in a good space. I was there in college, but I think I've got a much, much better relationship with it now. So it's fun. Try not to bet on my teams too much because unless I have a good pulse on my teams, but I don't like to do that because then you start, you lose the fun of just watching the game, a lot of the time. So many times on the games I want to watch that I'm like, oh, this is going to be a great game. Like usually there's no pulse on like what I think is going to happen. So I'm like, I just want to watch the game for fun to watch the game. Usually those are not games I would ever bet on. But we'll see. See how this weekend goes. Pick up some TLTW. Yeah, I think so. TLTW. I mean, we're talking TLT, like, and stuff now. It's like you can get a nice yield, a very nice yield on TLTW right now. A, and then B, the potential appreciation because you are buying, like if you are a dollar cost averager, right? You're buying a dip. So, here's what I think. If we look at TLT, right? Or TLTW is a good example, right? Because this kind of, the hype was kind of here. What I think is important to look at is volume. I kind of went through a phase of not giving a shit about volume, but I started to care more about volume lately. And, as there's another kind of like piece confluence or whatever. But notice this, right? So people were buying the dip on TLT back in here. Now, TLTW, we'll look at TLT's chart in a second. But TLTW was a great option because, well, go get a nice yield. You get your TLT exposure and you get a monthly dividend and it pays really nice. Awesome. Sounds great. And that was back in July into early August. Okay. So a lot of people start buying that. Now, who's hurting? All those people are like, oh shit. Now, are you down that much? Not really. But people are hurting. And maybe some are like, yeah, screw this, it's never going to go up. Maybe we still haven't gotten to that point yet. People are like, yeah, this is never going up. I'm getting out of this shit. It's a waste of my time. And that's the time you want to be buying it. So as it goes lower, right, you're getting all the people who are, painfully sitting in this thing, potentially panic selling or giving up or just moving on. And then you just accumulate some of those dips. So let's see what TLT's chart looks like. It's getting a lot more volume now this week on TLT specifically. Now that could be signaling a reversal. It could be signaling a lot of things. Who knows? But it did get some of those big volume spikes or some of that big volume push was in July and August. It did see a nice little, boost in volume. And that, again, that kind of came like in here when TLT was around $100, and now it's sub 90. So it's down over 10% from there. So a lot of people are underwater now. Is 10% a big deal? I don't think so. In TOT's frame, it's a decent amount, let's be honest, because TOT does not generally move incredibly large. Go back through history. There's periods of time, like if you zoom out on the thing, like there's periods of time where TOT's range, give it a second, has its ups and downs, but okay, let's see what this range is. From low of 2015 to highs of 2016, 24%. Oh, that's not bad, right? That's a nice move, but don't get me wrong, that's nothing crazy. The bigger move was here, the pandemic, but different story. More factors at play there. Are we about to get something like that again? I don't know. We'll see. We will see. TOT is now at levels we haven't seen since literally over a decade ago, since 2011. Down to 2011 lows. So you want to buy the dip on TLT, you're buying it. You're getting a level that we haven't seen since 2011. Now, again, when it comes to yields and stuff and bonds, and it's because this different environment right now. We had a massive inflation, so they got to curb that by raising rates, which they have to curb the massive inflation that we haven't seen in so long. You have to raise rates to levels you haven't seen in so long, and so now here we are. There's context behind it for sure. So it's not like, it's not like it's a stock or like it's the S&P 500 where it's like an average of all the friggin' stocks, and you can go, oh wow, this is a great deal. You don't necessarily know. Like there's a scenario where the economy could just suck these rates right up and handle it with ease and just be fine at high rates. And now the new standard is where we are right now for the next decade. And you could be underwater on this. So there's no guarantees, right? But we talked about it last week or our last stream. Just the realities of the lags to raising rates is insane. Like, it's honestly worth diving deeper into, like on your own time for research purposes, but also like if you're interested in that stuff, but like also just to think about, like it's not very difficult to think about. We talk about like the Fed raises rates. So you have inflation, okay? The Fed raises rates. You see how long it takes for them to raise rates for many, 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 many months, and then inflation starts to come down. So you see how long the lag is there. And then people talk about recession. People talk about the housing market crash. People talk about all these other things, losing jobs, the job market. The Fed with the job market right now, it's a different game. Like there's for example, in the banking space, which I have more of a personal connection to, as my dad has worked there essentially his whole life. You have a lot of companies that, not massive, not Apple quality companies, but also not your mom and pops, like those middle tier companies that have so much debt, and so their expense on their debt has gone up insanely. So it's not like, rates went from 2% to 4%. Well, no. If rates went from 2% to 4%, for example, for them, well, that's doubling their interest payment. So their debt becomes that much more expensive. And so at some point you can't pay that. And so once they reach certain time horizons and that debt becomes due and they can't pay it, that's when you have the bankruptcies. That's when you have more problems. That's when you have more layoffs. So that is so far, from when the Fed raises rates, it's so far down the pipeline that it honestly is kind of mind-boggling that we are sitting here thinking to ourselves, at all, that the rate hikes matter at all right now. They don't matter at all right now. They will matter in months to years, not right now. It doesn't matter. The Fed can go and do a massive hike today. The market will react because the market's going to react to what that means for the future, but it's not going to do anything. It's not going to bankrupt somebody today, most likely. It's not going to take down companies. It's not going to do that. It's going to take so much longer for it to do that. So the longer that rates stay higher, the more painful, because the more expensive the debt becomes. And hey, we've been through 10 years or whatever, or more than that. It's decades of this declining rate environment. The past 10 years, you got to go back. Like we were talking about on TOT. You haven't seen, we can go the 10 year, just look at the 10 year. Let's pull the 10 year up. You haven't seen the 10-year yield up over 4.5% since, let's see. Taking their time. Sweet time. We got that nice channel on there too. Yes, this has been just like a pain in the ass. It hasn't been this high since 2007. 2007. So you had essentially a declining rate environment that entire time where debt became cheaper. Debt became cheaper for the past decade and a half. So you have companies that have never, some were created on the backs of that recession, that have never experienced this. So like, there's just, how could you possibly try to fathom what is going to happen? You don't know. Like, maybe it's going to be okay. Maybe companies will be fine. Maybe like rates will kind of start to roll over like in a couple months, and like maybe we can avoid some problems. Maybe the Fed will start to realize, oh shit, we're kind of fucked, and start cutting. But is it going to be too late? That's the question, right? Who knows? That's the question. When the Fed starts cutting, this probably, based on how the Fed has talked to us lately, the Fed starts cutting, and like there's not a lot of issues that we can tell right now yet. Like, that's not a good sign. That means they know something's up, and they know that there's major problems coming. So Fed cutting rates is probably not going to be a good thing. Could be the soft landing. Maybe they can ease it in. Who knows? But there's going to be a reason why they cut. So you have the options of have a massive catastrophe, you have a massive issue, or they can somehow land this plane. I don't know. So that's where we kind of stand across that whole board. 50% TLT, 50% TLTW. Or you can go TMF and go really crazy. Yeah, TMF has gotten absolutely annihilated. This is the 3x ETF on 3x bullish ETF on TOT. I mean, hey, when the bounce comes, you'll kill it, but it'll do well. I don't say you'll kill it because you could be in from an $8 average, like some people. I don't know who that would be. But no, I mean, I have a little bit. I actually trimmed it a few months ago, and I was buying TOTW with it, so I have I'm at a much better spot with that. But just because I was able to sell covered calls in this, which again has not been really worth it right now. It's more risky, higher risk, but some like to take the risk, and I prefer taking the risk on 3x ETFs than options any day of the week. I think it's 10,000 times better, at least right now. No picking dates, no picking times, no have to worry. Just let it do its thing. And if you're wrong, you're wrong. You can be wrong whenever you want to be wrong. You can establish a level you're wrong at. You can ride it out. You can dollar cost average it. You can allocate a certain percentage of a portfolio to it and just not worry about it because it's only so much of the portfolio. You don't really care. And that's kind of how I'm doing it. But safer play would be TOT. TMF also has a dividend, by the way. TMF pays a 3%, almost a 4% dividend. So there is a dividend they paid there, but not much. The risk on watch list now above me here, everything except Coinbase is all green on the risk on watch list. So that's a good sign if you like risk on stocks. ARK is at 39. So you had these gaps. So we essentially had a gap up day and then kind of a slower, like a kind of a bleed back down off of that. TMF average at 560. It's not a bad average. It's actually, I think, a pretty good average. 560 is nice. Because it's at like under 5 now. TMF, right? It's just under 5. I sold a $5 put on it too, like 2 weeks ago or last week. Yeah, it's at 480. I sold that put though for October 20th. So I got some I have some Labu, which is the 3x ETF in the biotech sector, 3x bullish. I have some of that. I sold some puts on, but and they may not. They're currently not in the money. They're at 350, and we currently sit on Labu at 381. So they would need to drop. It could totally do it. And maybe you're kind of flagging for that right now, but you would need to drop a good bit more. Actually, you would need to go to a new low of the year on Labu for that to be not in danger, but for that to be threatening actually getting in the money and causing me to buy Lobby, which I will buy. I'm 100% down to buy it. I like it here. So that is the plan. GNRC was so freaking dirty to me. Well, the chart really messed with you, man. It really did. So this I had, it's like it came from my, now I had a put credit spread, so just kind of a weird way to think about how to play it. I had looked at it and I bought it somewhere in here, and it pushed up to here. My credit spread expires this week, so I went out about a month and a half from the time that occurred, and we rallied for about 2-3 weeks, and then in September we just came down with the market kind of to a degree. So that kind of sucks. And then it closed. I'm like, I'm stopping out if it closes below this level. It did. It literally closed below that level. The next day it gaps up, and now it's up here. So I would have been able to profit like a lot more on it. Instead, I took a little bit of a loss on the I had to buy back the credit spread for more than I originally sold it for, essentially like $1 or more than what I sold it for. Versus right now, I would be able to buy it back for like, I don't know, 75 cents, roughly speaking. So I sold it for like 2 something, and I'd be buying back for 75 cents on the contract. So it would be a nice little gain, but it is what it is. SOXS is a 4% dividend. Jeez. That's actually pretty interesting. Huh. I don't know why that's the case. If SOXS is such a larger dividend than SOXL, SOXL. I wonder why. FinViz, we've got 42% advantage. Oh yeah, have you guys seen this? This was, I put it in the Discord yesterday morning, but this came out yesterday, and for the week ending 9/27, and we got 27% bullish, almost 41% bearish, almost 28% bullish, 31% neutral. So you got a lot of bears, bulls, not so much compared, but not bad. I mean, they're holding up decently. I'm surprised. Not surprised, I guess. I was thinking maybe it would be around 25 was kind of my thought about that. Maybe towards 25. And bearish, I was thinking over 40% for sure. And that's kind of what we got. We got pretty close to that. So kind of cool to see the sentiment, how it's shifted. And then if you look at fear and greed, it's at 29. So we came back up a little bit. We were off. Let's go. We did get down to 24 at one point on the 27th on Wednesday, briefly, and then it's come back from there. We did get down into extreme fear. So just to kind of like to play off this, right? Like, let's just think. We did get down to extreme fear back in March, mid-March. So let's go back and look at what happened there. Not that that's a perfect, I mean, it has to bounce here. No, but if you were to go back to SPY back in mid-March, you got to go kind of pretty far back. That was right here. So SPY breaking down, right? Breaking down below some of these higher low or these lows, right? Breaking down lower highs. Then that comes, and then we have this big rally back up into early April. Consolidates from late April, or really from like mid-April through mid-May. Then it has the next leg of the rally after that. So I don't know if that has anything to do with this, but my suspicion would be if we were to go up, you probably have some sort of degree of that where like if you were to go up, maybe you kind of consolidate here before the next rally. You don't just go straight up and make a new high, I would think. But who knows if that's what's going to happen. Yeah, March of the banking crisis. So that was kind of part of it. So we don't really have that right now to kind of really, I mean, considering, so like that's what kind of gets it interesting to me. We had that, which was a pretty big scare back in March. Not to mention the market also kind of pulling back as well before that a little bit. So now the market just pulled back on its own. And by pulling back on its own, we saw extreme fear get hit. Barely, but we pretty much got down to that threshold. It's kind of impressive. It's kind of impressive if you ask me. So I don't know how much more valid that makes this argument, but like no news driven fear really. I mean, I guess obviously there's always news driven fear, but no like specific event driven fear necessarily that has driven us down to extreme fear. Kind of just got there naturally, and people have slowly made their moves, made their positions, and rotated themselves out of what they didn't want to be in. And maybe now we'll see what happens. People want to rotate back into things they want to be. We'll see. Labu going negative. $4X. She's trying to bounce a little bit here. Yeah, I mean, all in all, a decent. I mean, there's probably stuff to take advantage of here today. I mean, personally, there's not a lot of consistency in what I'm looking at from like the stocks I trade generally. You'll have like my trade list today is half and half. So you got half red, half green. And so that's not great in terms of from like a consistency standpoint. Looking for, help essentially from other names to kind of help push things higher. You're not really getting that. So not that matters necessarily, but I'd like to see that. And when the market was working nice, everything was either up or down on a given day, most of it. And then you'd have, for example, Tesla was the leader, but Nvidia, Meta, Apple, whatever, were kind of like right behind it. Tesla would break out to the upside. Those other guys would also push up, and it would kind of almost like give a little tailwind to Tesla. SPY would push up a bit, and then you get that bigger extension, take profits, hit a little bit easier. When you got, when you're looking around and like Tesla's got a setup, but nothing else does, and then Tesla kind of breaks out up or down, but then everything else kind of starts going the other way. That's kind of the nature of the market we've been getting right now. So it's a good time to step back and understand that, like from that perspective of intraday momentum. But also, like for me, I'm loving what I'm seeing because I'm getting a lot of data off of this, so that like it doesn't necessarily have to be next like year at this time. It's more so going to be like when I see the same signs again, and if I have I much more understand now like the realities of having, when you have a good run, that's great, but there will always kind of be a trough, right, to that. There will always be a trough. There'll always be a low to that high. Now, you have the opportunity to make that a higher low. So that's kind of the way I think about it. Like you will go like I'll have a week or two, right, where I'll just be like, I can't miss. Everything is working. The month of July was kind of how that felt, right? And looking back, went on a trip at the end of July, came back in August, and just got like not slaughtered, but just got chopped around a lot. Didn't get slaughtered. I make it sound worse than it is, but it was red. August was red, and it hadn't had a red month since April or since May or whatever. Since before that, not May, since February, I want to say. And then back in February, I was trading multiple strategies, so I couldn't really truly give myself like a good understanding of like, what was the problem? Like now I just trade one thing, so I know the problems. It's a lot easier to identify the problems here. But yeah, you can like once as you have that high, understanding and being ready for the backside to come. Not sure when it's going to come, so it's not like, okay, we need to start, we can just stop everything and just do the opposites or whatever. No, like there's no, you're going to ride that, but at the same time, it's going to come one day, or it's going to come 1 week or 1 month or 2 months. And so now you're prepared for it, take the gains, lock it into, for example, a dividend ETF so that it's cash flowing for you. It's making you passive income. And then, you at least protected that, and now it's cash flowing for you. So you're able to put in that higher low when things go down, and now all of a sudden you're trying to scratch your head how to figure out how to, adapt to the next change in the market. Like you're not really sure. Well, you made a higher low because you're going to have some pullbacks, you're going to have some drawdowns, but you have done the smart thing, the thing that maybe past me has not done, or past you hasn't done, and you are now going to put yourself with a nice higher low and keep on pushing up. That's kind of like just a general sense, not just like account value. It's just maybe confidence, maybe it's your consistency, maybe it's a lot of things. Could be a lot of things. Aftermath of F1C, possibly. Government shutdown out the way, and the market rally. Yeah, this government shutdown shit. It's a joke. It's a joke. I mean, the more you think about it, I don't know. We talk about this sometimes. Like, I feel like there's got to be better countries to live in nowadays. Definitely spiking into the close here, though. But then again, everyone's got their problems. You go somewhere else, there's going to be other issues. You go to other places, then you got other problems with healthcare or this or that, or then you've got different leadership, and it's give and take, right? Give and take. Give and take. See if we can finish green. We're kind of on the border of finishing green. Hit right to VWAP and then rejected. But yeah, I have been trading the prop firm demo account just to test it out. I am going to be very happy to switch to shares soon. I've been liking it. It's just clean. Like the stops are clean. I don't have to like, there's less second guessing and less thinking about, well, if I come back this far, like for example, here's a play on Tesla. I'll go to Webull here. Here's I did have this play on Tesla today, and you'll see on the right-hand side, of course, it's going to take an half hour to load. The right-hand side, this is the graph. I know it's not perfect. Actually, I'll pop myself out of the way here. So the right-hand side is the option contracts, and the left-hand side is the price of the stock, right? Share price. So I got in here. I got in short here. It was the inverse, right? Tried to break out, failed. I actually was long. It failed. Massive red candle. I got in short with a stop loss above long. You'll see that in the trade recap. The inverse of the strategy, which has been working well. And then I ended up taking profits into this move down. Now, I enter here at like 253. Okay. So contracts initially I got in at 630. Contracts went to a high of 720. Then they pulled back to 630. The pullback to 630 was right here. Tesla was a full 40 cents below the entry point that I had, yet I would have been now break even. So that's decay and shit. So it makes it when you go to put the stop loss at break even on your contracts, you will miss out on potentially some moves like this, because if I was just playing shares, I put the stop loss to break even after I lock in some gains. Stop loss, break even, take profit maybe at, I don't know, you figure it out, maybe low of day. You can, justify based off, okay, you can go 1-to-1 risk reward, 2-to-1 risk reward, 3-to-1. Maybe that's how you play it. I don't know. Everyone's going to have their own strategy, their own whatever. But massive. So the thing went from 630 where I got in, 720 back to 630 contracts wise, then went to 930. Not that I'm going to take advantage of the whole thing, but I almost without a doubt believe that I would be able to still capture some of that move from the initial entry point by literally just putting the stop loss at break even and knowing it is break even no matter what. And it doesn't matter. Like, it's break even. I don't really, versus having to sit there and watch the charts, because if you're playing share or if you're playing options, break even might not be where you originally entered because of all the other factors of options, even if you're playing next week's expiration. See what I'm saying? So I'm excited for it. I think there's going to be a lot of opportunities like that. So that's a funny move on SPY right there into the close. And they track with TradeZella. So I'm like, yeah, that's great. Let me actually just double check what they got over here. Did they load it up yet? Yeah, they did. This is the demo account that I was messing around with. So that Tesla short, like I shorted Tesla for a and because, which is cool, because I have stop set, it'll add the R multiple on there. It's tougher to do with options, that's why I don't add it personally. But this is all tracked without me doing anything. Like I just connected my brokerage account through TradeZella, and it just goes in and just does it all, which is pretty cool. I don't have to upload shit, just does it all, which is nice. Less than 3 minutes, 2 minutes to go, roughly. To a close. I hope things get more interesting into the end of the year. I mean, we'll see. We'll see what happens. But this is going to be not yet, but I think I'm just going to do a quick run through of my small cap watch list. I can only imagine. I can't even imagine like where these are looking right now. They got to be looking so bad. Let's see. With the recent pullbacks, I mean, yo. Dude, look at some of these charts. Like, this is where, like, there is probably going to be a lot of money to be made on this. I would be very carefully cautious and, like, conservative in how I would approach these. But there's going to be some monster amount bounces in small cap land into end of year. Problem is, you got to pick the right ones. Not everyone's going to go like 2020, 2021. Everything went. This almost happens every year, but not everything goes usually. That year, everything went, so you could just throw a dart and, be fine. There's going to be a little more skill, a little bit more analysis, and a little more thought process that has to go in. Look at ACHL just freaking sitting on bottom right now. Jeez. There's going to be some good stuff. Of course, this thing is like slow as molasses. WISA. Previous history of a massive runner. It's a sub $1 stock. When they come for the micros, when they come for the sub $1, oh man, these are going to be good plays. Not saying these are buys like right now. Who knows? They can go a lot lower. They probably will. But these are potential accumulation zone type stuff. And my general rule of thumb is 25-30% stop loss. So, but you probably want to have a plan. So when I say have a plan, like your entry point, you don't just buy it at once. You know what I mean? Like FNCH, for example, right? Let's say you buy it at 519, right? Because you're like, I want to buy this thing into end of year, and I'm going to hold it to February 1st. I don't know. Let's just make up a date. Or until I hit take profit of this, or I hit stop of this. It's probably how you should go about some of these things. I wouldn't really be holding much past February, unless the market's insanely hot. But generally speaking, it's like January is like final push. And if it's not going by then, probably a dud. So make sure that stops in there pretty tight. But like, you would probably be looking at these and saying, like, I would look at them and say, okay, I'm going to add it. I'm going to have 3 buys. I'm going to buy at 5. I'm going to buy at 4. I'm going to buy at 3. And if we go to, 250, I'm out. I mean, that's a massive, maybe that's too much. But like that's kind of how these small caps can work. And so you have to like DCA almost precisely into them with risk in mind, but understand that there will be, if you have a list of 5 and you have like a running list of 5, you're going to get, no guarantees, but you can get a 500%er one day. You'll wake up to massive news. The thing goes up 500%. It'll happen. Like there's going to be a ton of those off of bottoms. You will get them. So you don't need to have 10 of them. You just need to get 2 of those and then have, 5 to 10, 20%, 30% losses. And, you'd probably be fine. I don't know what the math works out to be, but like, you know what I mean? It's like, that's kind of the game of small cap land. And to be honest, into better seasonality periods, like end of year into beginning of next, stuff maybe floats up versus floats down. You know what I mean? Instead, you generally see a little more upward movement than downward. So you could do pretty well. I mean, across the board, you might have a better win rate than you think. So, but in small cap land, when it comes to small cap swings, like you do not need to have a 70% win rate. You can have a 40% win rate and if you have a 40% win rate, but you are swinging like with really good risk reward, you can do very, very well. So that's my plan, is to start looking at this list again, add some new ones, trim some other stuff out, and we'll come back to that. I mean, we're into October, so like end of this month, like I think we got to start looking at that stuff more seriously, because end of this month, honestly, this next month is like a decent month to start, a little bit of that first buy. Nothing wrong with that first buy, in October, that second buy in November. And if you play a third buy, somewhere in December, if that stock still hasn't, done anything, could be the look. I don't know. So we finished the day with, let's just refresh this really quick. 43% advancers, 52% decliners. Pretty shitty day. Dow was down about 0.5%. NASDAQ was green barely. S&P was down a little bit, and the Russell was down a little bit as well. Power Hour is last hour of trading. So from 3 p.m. Eastern to 4 p.m. Eastern, or whatever time that is for you. For me, it's 2 p.m. to 3 p.m. Peace, Kyle. I'm going to probably wrap things up here for today. I'll have a trade recap for today. It was a break-even day, but I'll have that recap out in a few minutes. Tomorrow I'll have September's entire day trade recap video out. And then, so hopefully this is, semi-enjoyable. We'll be back next week. But this is the last week of last day of September. So quarter 4 begins. Let's see what happens. Market tends to be pretty strong in quarter 4. We'll see what happens this year. Thanks so much for watching. Have a great rest of your day. Great weekend. Get outside. I'll see you guys